AI is destroying the job market. Every week we're seeing a new headline. 6,000 people fired from Microsoft, 30,000 fired from Amazon, 1,800 from Target, 600 from Meta, and the job market's weakness is getting so dangerous that now even Jerome Powell is speaking out about the threat it faces to us all. And apparently, this is all being driven by AI growth and improvement, and the fact that one employee on a computer with AI is now 10 times more productive than they were before. But in this video, I'm going to explain exactly what's going on, and I'm going to explain why this isn't actually about AI at all, but rather it's about globalism and how the globalist elite are using AI as an excuse to push through their neoliberal globalist ideals whilst none of us are watching. Now, this video is sponsored by Incogni, but more on that later. Now, first of all, let's run through what exactly is going on with the job market in the US and where these massive layoffs are coming from. So here is a brilliant example. Microsoft laying off about 9,000 employees in their latest round of cuts, and that is after they already fired 6,000 employees back in May of 2025. We have Amazon here planning to cut as many as 30,000 corporate jobs starting on Tuesday. Actually, that's the day I'm recording this video, as the company works to pay expenses and compensate for overhiring during peak demand of the pandemic. This figure represents a small percentage of Amazon's total 1.5 million employees, but nearly 10% of their 350,000 corporate employees. And this is the largest job cut at Amazon since around 27,000 jobs were eliminated in 2022. We have Target cutting 1,800 jobs, in particular again from their corporate roles, in their first major layoff in around a decade, as they're trying to reverse their stagnant sales and simplify their operations. And we have Meta, what used to be Facebook, cutting 600 people out of the several thousands of roles in its super intelligence labs. So this is affecting in particular the people working in the Facebook Artificial Intelligence Research Unit. Now, this isn't exactly news at this point. I'm sure you've seen this before. If you search company fires staff, you're going to get 1,000 different news articles over the last few months explaining all the different mass layoffs happening all around the world, but in particular in the US and with tech jobs. Now, this is most common with those huge companies that are employing thousands of people. And the most common excuses, or the most common reasons for these firings, well, a few companies are out there claiming that it's all because of overhiring during the COVID boom and during those times of high stimulus and really low cheap interest rates. Some companies are out there claiming that it's due to tough economic conditions and falling revenues and rising costs, and it's needed to turn the business around. But most of the time, the sentiment is all based around the idea that AI is making people more efficient at their jobs, and so their co-workers are getting laid off. Now, it is notable that actually most companies are very reluctant to say this outright. There is a lot of backlash right now against AI-related job losses at the moment, in all sorts of the media and in all sides of the political spectrum as well. So most companies really don't want to say that this is due to AI, but when you speak with investors or you listen to what the markets are thinking, and all of them are firm on the belief that this is because of the AI boom. We also can't ignore the trend that the warehouse workers at Amazon are safe. They're going to keep their job because they're not being replaced by AI machines in the same way that the corporate staff are. But the software developers, the corporate, the white-collar employees, they are being fired at the exact same time as we see a monumental AI boom. And as a result of this, the job market is just plain and simple really bad in America right now, and it's getting worse. It's getting worse, and this is supported by the data that we're getting out from the Fed or the Bureau of Labor Statistics themselves. As you can see, this graph right here is from the Bureau of Labor Statistics. This is from their last full report, and it shows this chart here, the unemployment rate every single month going all the way back to August 2023. And you see a very slow but steady rise, a trend that is certainly going upwards, peaking at about 4.3% right now from just 3.7%, so up more than 0.5% over the last couple of years since AI started. And then we have on this chart over here, non-farm payroll employment month over month change. So how many new jobs have been added to the economy? You see, go back a couple of years and we were seeing 150,000, 100,000, 300,000 new jobs added to the economy every single month. And there has been a very distinct drop off in recent months, in particular, job increases are just low and they're falling right now. We had 22,000 new jobs in August. Again, we were seeing 150,000 in August of 2023. We saw outright job losses in June of negative 13,000 jobs in the economy, which I believe is the first time that's happened outside of the COVID lockdowns. And this is the sentiment that we're seeing all over the media. The outlook seems to be getting worse for job seekers. The US economy added 22,000 jobs in August, below expectations, and the unemployment rate rose to 4.3%, the BLS reported. Meanwhile, a data revision showed the economy lost 13,000 jobs in June, the first month of job losses since December 2020. That loss ends the consecutive job growth streak that had lasted 53 months from January 2021 through May 2025. Outside of the pandemic, the US economy hasn't added this few jobs in the first 8 months of a year since 2010, around the Great Recession, when the US was still recovering from it. And you can see from this graph here just how rare a negative month is for job losses. We had one in 2020 of December, and then before COVID, you have to go all the way back to September of 2010. So yes, to say that the job market in the US is poor right now is very, very true. For most of 2025, it was actually okay. It wasn't awful and it wasn't terribly worrying, as you would see from any time Jerome Powell spoke about the job market, say 6 months ago. And he gained a characteristic as there weren't many new hirings, but at least we weren't seeing mass layoffs. And it was classified as a no fire, no hire economy, showing stagnation, but not an outright fall, but that is now changing. The US labour market has been characterised as a no hire, no fire landscape for much of the past year, but no hire, more fire increasingly looks more accurate, providing further ammunition for the Fed to cut interest rates. Retail giant Amazon announced 14,000 layoffs. We've seen other layoffs, with UPS cutting 48,000 over the last year as well. Now, even Jerome Powell is finally starting to get worried a little bit at the job market. Fed Reserve Chair Jerome Powell drew a stark picture of a labour market that looks fine on the surface, 4.3% unemployment, solid consumer spending, but is quietly losing momentum underneath. Once you adjust for the statistical overcounting in the payroll data, he said during a press conference Wednesday, job creation is pretty close to zero. He connected that slowdown, at least in part, to what CEOs are now openly telling investors: AI allows them to do more with fewer people. He also noted a significant number of companies have recently announced layoffs or hiring pauses, with many of them explicitly citing AI as the reason. Much of the time, they're talking about AI and what it can do. We're watching that very carefully. Those comments came as the Fed cut interest rates by a quarter point to a range of 3.75 to 4%, citing downside risks to unemployment, even as inflation remains elevated. Powell said the US economy is still expanding at a moderate pace, even as hiring slows. He described that spending as one of the big sources of growth in the economy, driven by companies building data centers and other equipment tied to AI. At the same time, Powell emphasized the boom creates a policy dilemma for the Fed. AI and automation are boosting output, but they're also allowing companies to do more with fewer workers, leaving the labor market suffer even while GDP stays positive. We have upside risk to inflation, downside risk to employment. This is a very difficult thing for a central bank, because one of those calls for rates to be lower and one calls for them to be higher. So Jerome Powell here is actively stating that AI is the key risk driver here, causing a problem within the job market. And this is after he's been fighting against Trump for almost an entire year against rate hikes, because Powell has been so scared of inflation. But he's now finally cutting interest rates, and he's outright stating that it isn't because he's confident that inflation is no longer a problem. He still sees risk in the fact that inflation may well rise to unsustainable levels very shortly, but he's so convinced and so worried that unemployment is a problem that he's willing to risk that higher inflation trying to fight that higher unemployment. Now, if you're like me, you're probably fed up with the amount of cold calls and phishing emails and alerts of data leaks that you're subjected to these days, and you've probably never taken any steps to actually stopping this before either. And to be fair, how could you, right? It's just too time-consuming, too complicated, and too big a task to remove your data from the ether. But that's why I've partnered up with Incogni to sponsor this video. They're an online service that removes your sensitive and private details from the internet, and at a time where the entire EU and UK are now forcing you to upload sensitive information just to access the internet, this problem has never been more serious. Your information is collected from the internet and then bought and sold by data brokers who have a seriously bad reputation when protecting your data. And Incogni fixes this problem. They automatically and simultaneously search hundreds of known data brokers, online directories, people search sites, and commercial databases to get them to delete your information. And now their services just got even better with their custom removal feature. If you find your information online, just send them a link and their dedicated privacy expert will handle everything else. Take back your personal data with Incogni and use code STOICFINANCE to get 60% off an annual plan, or just click the link in the description and that code will be automatically applied for you. Now back to the video, and one of the big problems is that the headline figures on the surface of the economy are all fine. It's only under the surface that things actually start to look a little bit bad. The US economy is actually growing pretty well and unemployment is pretty low at about 4.3%. And for the average person just checking CNN or CNBC once a week, they don't see the real data that shows the problem, and they don't watch videos like this one breaking down Jerome Powell's comments and his fears about unemployment. All because the headline figures are disguising the true problem with the market, which is the economic melt up. First of all, what do I mean by disguising the true figures? Well, recently, a Harvard economist did the calculations and found out that without investment into AI data centers, US GDP growth would have been a practically stagnant 0.1% for the entirety of 2025. US GDP growth in the first half of 2025 was almost entirely driven by investment in data centers and information processing technology, according to a Harvard economist. Excluding those technology-related categories, GDP growth would have been just 0.1% on an annualized basis, a near standstill that underlines the increasingly pivotal roles of high-tech infrastructure in shaping macroeconomic outcomes. Technically, investment in information processing equipment and software was only 4% of US GDP for the first half of 2025, yet it also accounted for fully 92% of GDP growth over that period. This crazy AI bubble that we're all tired of hearing about has seen $400 billion thrown into the US economy this year alone, all in the vain idea of trying to build enough data centers so that AI can change the world. But it's all based on predictions and hopes for the future, and no actual profits or proof that any of these AI companies are going to be able to make a consistent profit into the future. And that is inflating the GDP of the United States to make it look better than it really is. And then we have the inflation of US stock prices by the AI bubble as well. On the surface, the S&P 500 is as strong as it's ever been. It keeps hitting all-time highs, but it's all driven by the AI hype stocks. Companies like Nvidia going insanely valuable while the rest of the market stagnates. And even JP Morgan have noticed this and called it out as a problem. JP Morgan says that AI stocks drive $5 trillion wealth surge and transform the US economy. Their analysts report that 30 leading AI stocks generated around $5 trillion in wealth gains for US households over the past year, reshaping American consumer spending and economic dynamics. Their economists in the bank's latest research highlight that these AI companies now account for roughly 44% of the S&P 500's total value, and their rise has contributed to an estimated $180 billion boost to annual consumer spending, equivalent to nearly 1% of total US consumption. Now, all of this wealth that's been created by this AI hype and bubble is based on excitement and hopes for the future. Not a single one of these companies has proven revenues or profits selling to a company outside of the AI bubble. They're all circular deals inflating each other's values, pushing S&P 500 and asset prices in general to insane levels. And that hides the true problem with the economy. Last Friday, the S&P 500 reached a brand new all-time high. And on that exact same day that the S&P 500 reached its highest point in human history, 80% of the stocks within the S&P 500 fell in value. But the top 1% of those stocks, super concentrated in AI, rose by so much that they outweighed the entire rest of the market. And what this distortion of the markets correlates with is a melt-up phenomenon, the opposite of a meltdown. All assets are being inflated massively at the same time. Stocks and AI companies and even stores of value like Bitcoin and other cryptocurrencies or gold are inflating in value. What that really means is that the US dollar is losing its value, at the same time as most other currencies around the world are also losing their value too. So in comparison to, say, the pound or the euro or the yen, for example, the US dollar doesn't look like it's in trouble. But in comparison to other stores of value like gold, the dollar is losing its value, and that's represented in the markets by massive increases in asset prices beyond all possible reasonable predictions of the futures of the underlying pieces of those assets. Now, there are loads of problems with this AI revolution, and the two main sides of the problem is the first, that if AI does really change the world, there will just be no jobs left for humans. So where is our income going to come from to allow us to buy things to keep the economy going? And then the fact that this AI efficiency boom is actually just a globalist ploy by companies and neoliberals to outsource work to countries like India, cutting out Western jobs, pretending it's because AI is putting us all out of our jobs. Now, I'm personally not actually worried about AI taking all of our jobs for at least 10 to 20 years. AI itself is incredible at very, very small specific efficiency gains, but not at replacing humans altogether. For example, AI cannot write a good YouTube video at all. I've spent a lot of time experimenting with it, using all the different language models, and it's always awful. There are tons, literally thousands of AI slop finance channels on YouTube, and I can tell within 10 seconds of starting a video if it's written by AI or not, and there is a considerable quality reduction in AI writing. But AI is incredibly useful in making a good writer more efficient if they know what to do. I use AI for research, for finding sources, for finding assets for my videos, and that saves me probably 2 to 3 hours a day compared to 5 years ago when I first started making videos on YouTube. But the idea that it's just going to take over this space altogether is utter nonsense, because it just isn't good enough yet. And every time there is a new technology, there is something called creative destruction. In order to build something new, you have to destroy something old. In Industrial Revolution times, go back a couple hundred years, and the Luddites feared that new machines would put people out of work because they couldn't imagine a world where 90% of the population didn't need to work in the fields growing food, so they opposed that new technology altogether. 2,000 years ago, a Roman invented a form of clear, colorless glass, much like we have today, the first in human history. But he was executed by the Roman emperor because the emperor feared it would put all the other glass workers out of business, when in reality, the jobs lost by the older, inferior technology would be more than replaced with new jobs from the new, better technology. Even as recently as a few decades ago, there used to be millions of jobs in the US alone just on telephone switchboards and transcription and other things, which are now easily replaced by computers and better technology, but there was no massive instant unemployment and societal collapse. It's impossible for the technology to change the world quicker than the world learns how to use that technology. And at the end of the day, this technology has to be applied by humans. If humans don't understand or aren't capable of using that technology yet, it can't replace the jobs. And if humans do understand and can make use of that technology, then that new technology opens up new jobs that never existed before. That is the exact way it's been whenever we've had a technological revolution in the past, and I think it's going to be the same for AI. Currently, 99% of the population have no idea how to effectively use AI. And no matter how innovative that 1% who do know may be, building the best AI tools, the money for those businesses, it's only going to come when people start using AI en masse. And when people start using it, they will create new job opportunities from the technology. And this aligns perfectly with the actual evidence in the economy right now. Take software developers. Currently, it's the single largest application of AI in the entire world. And supposedly, software developers will be completely wiped out by AI within 1 to 2 years, according to the companies building the AI to try and do this. And that's what seems to be the case when you see Amazon and Meta and other tech companies firing thousands of their developers and not hiring any new ones. But I actually found a really interesting piece written by a software developer who tried to use AI to become more productive. So I'm going to read a little bit from this piece here and just break down exactly what he found. I know software development. I've been doing it for 25 years. I was an early adopter of AI coding and a fan until maybe 2 months ago when I read the METR study and suddenly got serious doubts. In that study, the author discovered that developers were unreliable narrators of their own productivity. They thought AI was making them 20% faster, but it was actually making them 19% slower. This shocked me because I just told someone the week before that I thought AI was only making me about 25% faster, and I was bummed it wasn't a higher number. I was only off by 5% from the developer's own incorrect estimates. So I started testing my own productivity using a modified methodology from that study. I'd take a task and I'd estimate how long it would take to code if I were doing it by hand, and then I'd flip a coin. Heads, I'd use AI, and tails, I'd just do it myself. Then I'd record when I started and when I ended, and that would give me the delta. And I could use the delta to build AI versus no AI charts, and I'd see some trends. I ran that for 6 weeks, recording all the data, and you know what I discovered? I discovered the data isn't statistically significant at any meaningful level. That I would need to record new data points for another 4 months just to prove if AI was speeding me up or slowing me down at all. It's too neck and neck. That lack of differentiation between the groups is really interesting though. Yes, it's a limited sample and could be chance, but also so far AI appears to slow me down by a median of 21%, exactly in line with the METR study. I can definitively say that I'm not seeing any massive increase in speed using AI coding tools. If I were, the results would be statistically significant and the study would be over. It turns out though, and I've collected a lot of data on this, it doesn't just not work for me, it doesn't work for anyone, and I'm going to prove that. But first, let's examine how extreme and widespread these productivity claims are. Cursor's tagline is built to make you extraordinarily productive. Claude Code's is build better software faster. GitHub's Copilot is delegate like a boss. Google says their language models make their developers 25% faster. OpenAI makes their own bombastic claims about their coding efficiencies and studies. And my fellow developers themselves are no better, with 14% claiming that they're seeing a 10 times increase in output due to AI. These claims wouldn't matter if the topic weren't so deadly serious. Tech leaders everywhere are buying into the FOMO, convinced their competitors are getting massive gains they're missing out on. This drives them to rebrand as AI-first companies, justify layoffs with newfound productivity narratives, and lowball developer salaries under the assumption that AI has fundamentally changed the value equation. And yet, despite the most widespread adoption one could imagine, these tools don't work. My argument, if so many developers are so extraordinarily productive using these tools, where is the flood of shovelware? We should be seeing apps of all shapes and sizes, video games, new websites, mobile apps, software as a service apps. We should be drowning in choice. Now, this author then went on to actually collect all of the data on the new releases of software since we've seen AI. This here is the average number of new iOS, so Apple app releases per month from 2019 to 2025. And you see it is incredibly consistent. Around about here, there was AI released, and yet there has been no increase in more Apple apps being made. This is a similar chart, but for Android app releases via Google Play, again from 2019 through 2025. And in fact, the number of new apps being released per month in this space has been going down drastically, with AI coming out around here and no new flood of software. This chart here shows you the total number of domains being registered for new websites going all the way back to 2014. And this bump here is not from AI because this is in 2015 and 2016. This here is when AI came into effect. And you can see absolutely no increase in the number of new websites, despite AI supposedly being a brilliant way of making that whole process more efficient. This here shows Steam's new releases by month, Steam being the largest video game platform in the world, and new releases being new video games being created and put on that website to be sold. And as you can see, a very clear, steady trend going upwards with no efficiency gains from AI whatsoever. GitHub repositories, it's the exact same story. The most interesting thing about these charts is what they're not showing. They're not showing a sudden spike or hockey stick line of growth. They're flat at best. There's no shovelware surge, there's no sudden indie boom occurring post-2022 to 2023. You could not tell looking at these charts when AI-assisted coding became widely adopted. The core premise is flawed. Nobody is shipping or creating more than before. The impact on human lives is incredible. People are being fired because they're not adopting these tools fast enough. People are sitting in jobs they don't like because they're afraid if they go somewhere else it'll be worse. People are spending all this time trying to get good at prompting at AI and feeling bad because they're failing, but the whole thing is a lie. The evidence that's actually available to us, it shows us that even in the most AI-excited industry in the world, software development, AI is not actually improving productivity whatsoever, yet it is causing mass layoffs. So what's actually the real cause behind this? Well, it is obviously globalization. Take this example here. Accenture has laid off over 11,000 members of staff as part of a restructuring program. They cut from 791,000 to 779,000 over the past 3 months, and they might not be done yet. With AI continuing to dominate the tech space, the IT consulting group has introduced AI training for staff to keep up with this new era of technology. They've warned staff who cannot keep up with the new training they could join thousands who have already been laid off. And what did we see about a week after Accenture announced they had fired 11,000 employees from the West, from countries like America? Well, they then announced that they are going to be adding 12,000 new jobs in the exact same space in India. AI is being used as an excuse to push globalism. It's not about AI taking Western jobs away. It's about globalists outsourcing our jobs to third world countries to boost their profits whilst harming our countries. Now, if I'm wrong about all this, then genuinely the world is a little bit screwed and it will never be the same. If AI actually does put 90% of us out of a job, well, capitalism will be over and we will fully enter a corporatist world because we need income to sustain the economy, to sustain the businesses which give us these jobs. And the genius of something like Ford and them paying their workers more and giving them the weekend off from work is that they had enough money to buy a car and enough spare time to drive it, so they increased their own customer base. If AI does replace all our jobs, who will be left to buy the stuff that companies make us rich with? The common idea right now is universal basic income, benefits or welfare for everyone essentially, so that we can afford to buy the stuff that the companies sell us so that the AI makes sense. If it comes to that though, corporatism will 100% take root and there will basically not be a single country in the world not captured by these neoliberal globalists. So that is genuinely a worst case scenario. The good news though is that so far there is zero evidence to suggest that AI is actually good enough to do any of that, and this massive job market collapse and these AI layoffs are actually really all down to globalism. Now again, take back your personal data with Incogni and you can use code Stoic Finance to get 60% off an annual plan, or you can just click the link down below in the description and that code will be automatically applied for you. If you want to tell me how right or wrong I am about this or to make a video about something in particular, you can let me know in the comments down below. I always read them. And if you don't want to miss out on my future videos, make sure to subscribe as well. But if you really want to drive change and help me and everyone else, send this video to someone else. Click the share button and send this video to a friend, to a co-worker or a family member, and expose to them the fraud of this supposed AI job market and how it's actually all the fault of globalism instead. Thanks. The UK is about to enter a brand new spiral of economic depression as we're now being exposed as the weakest economy in the entire G7 and the weakest developed economy in the entire world. The International Monetary Fund have just released their brand new report, their new data, and their new projections for the next couple of years, and it's sent